And we are live. Tackle Trading's halftime report here on 2/5/2019. It is Tuesday. It is a light day in the market. There's not a lot going on, but they call it a daily routine for a reason here. I'm going to welcome in my brother, Matt. It's Tim here. We got Cody on the back end producing. A lot going on. Matt, how you doing, brother?
You know, Tim, doing really, really good. Excited to be here with the crew for today. Kind of a boring day in the marketplace, but sometimes those are the best days to look at potential triggers to get into trades, both on the bull side and the bear side. Obviously, with the market being more bullish almost singly every day as we speak, you want to be looking for bullish trades right now, waiting for the market to get into resistance to kind of get into those bearish trades. But yeah, today I'm looking at bullish trades.
It is the Chinese New Year, Matt. What is your zodiac sign, by the way? Cody and I, we're both goats.
You're goats.
Yeah.
Did you guys settle on that? You're not rams
or goats? Sheep. I don't know. I don't even know. It said you could
goats.
Choose sheep, ram, or goat.
Okay, I want to get you guys' take on this, because if you had a choice,
I don't want to be sheep.
Are you going to be are you the sheep? Are you the goat, or the ram?
Well, like my old band Cake always said, sheep go to heaven, goats go to hell. So I'd rather be a goat. Bring me down, Cody. There's no doubt about it. I don't want to be a sheep. No.
I mean, what kind of question is that? Would you rather be the goat, greatest of all time, or a sheep?
I'd be a goat.
Or even a ram.
I'm a snake, and I don't know what that means, but that's my Chinese symbol. So.
Oh, you're a serpent.
I'm also a Libra. What else would you like to know about me?
Well, it's the Chinese New Year, it's interesting to me. I mean, what's your market posture? Because the market is fading up, but still green for the day, but not really carrying through on momentum.
Oh, there's just hardly no news today. I mean, we had Google's earnings last night. We'll get into it today. We're waiting on some earnings later on today. You had the ISM manufacturing report that came in at a slight miss, but it wasn't bad. Not a lot of international news outside of Australia and their monetary policy. So, you're not expecting a lot of price movement today. But if you want to take the read how the market's kind of behaving, look at yesterday after we got done talking, Tim. There was no news yesterday. No news yesterday either. And yet, what did the market do after we got done talking? Boom, 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 right? Just faded up. And so, yeah, we didn't have a lot of news today, but overnight, fade up, cash open, fade up. And then you have a little bit of an intraday pullback going on just right now. But yeah, when asking the question, are we bullish? Yeah, we're bullish right now. The market wants to buy. It's buying on no news. It's buying on bad news. The market wants to be a buyer right now.
It does, and it does continue to fade higher over time. Right here in the intraday, we're on a pullback, which is kind of, bringing it back closer to break-even point, Matt, on this upward candle. We do have clear air on the S&P. I think all analysis today is going to start with Google. We have a few things going on with corporate earnings. You have Disney tonight. We'll break that down later. The ES is at a higher point, and we are breaking out. I've got resistance at 2,800, support at 26. When we're at 27.28, it feels like we're in the middle of the range, wanting to test higher into resistance. Now, for it to break 2,800 and run from there, that would be a test later in the month. I put the question out there on Twitter. I mean, what do we expect from the month of February here? You had a radical December, you had a radical January. Now what?
There's variables, but if you remove all the variables and let's say you put all the variables at neutral, right? Some good, some bad, but it's at neutral. The market's going to fade up.
Mm-hmm.
If everything comes in where we expect it to come in, the market just broke out of 2,700. The market held 2,700 3 days ago. The market faded up yesterday on hardly no news. And even with Google reporting, we'll get into the Google because I got some things to say about the Google report. But, even with a slight negative reaction to the Google report last night, which personally I felt was a complete overreaction. And I'll just say this very quickly before we get into it. Apple goes up on earnings, right? Amazon and Google go down on earnings. Those earnings reports were very similar. They were very similar. And yes, Apple decided to run, Google and Amazon decided not to, but there wasn't a lot based on that. Google's report was actually pretty good if you actually look at the numbers. Google, and I'll pull up Google's chart real quick here, Tim. So we'll look at Google L here. And as you can see, Google's down about 1%. It was down a slightly more than that. So not a big movement here on Google. Short strangles obviously would have played out here, but Google's earnings per share expectation 11.03. It came in at 12.77. That's destruction when it comes to earnings per share, guys. That is a really good earnings per share beat. Also, revenue 39.3 billion versus an expectation of 31.3 billion. That's also a really, really good number as well. So when you're looking at those two numbers, and guidance wasn't bad either. Year over year, they grew at 21.5%. And if you guys have not listened to the podcast so far, make sure you listen to that, because we have a discussion on earnings and the depressing earnings that we're seeing in the first quarter compared to last year's numbers. But that's still a fairly decent number. Google went down slightly on this. Get this, guys. Slightly increased capital expenditure in cloud-based systems, as well as where we're all sitting here this morning, guys, sitting on YouTube. Google's trying to put out more YouTube, more cloud-based services, and so they had a little bit of an uptick in capital expenditures, but nothing too bad. I actually took, when I was just looking at the numbers, I took Google's numbers as a very positive, or not an extreme positive, but positive. But on the overnight action, it just sold a little bit. What was interesting, though, is that on the cash open, it's really trying to hold this breakout at 1125. You can kind of see it break out over here. The 1100 number is the official breakout, but it's really trying to hold that intraday level at 1125. If it does hold that level today, I'm taking this as a positive.
It still is up in pressing resistance. I know that we didn't break and run. It didn't have a huge earnings report. I like your analysis on the fundamentals and actually some of the numbers, Matt. You got to take it as a net positive when you don't see selling like that. But it does need to break for you to confirm a new entry point above 1150.
If you're looking at anything directional, yeah, I think a trigger, and let's look at this from an intraday perspective, anything above 1143. That would be a breakout. And if you want to be a little conservative, maybe you wait for 1150. But in looking at the price action and looking at at the reaction to the earnings report and looking at the numbers, I'll tell you what this screams to me. This screams to me bull put spread. Yeah, that's what it really kind of screams to me. Volatility is going to be coming out over the next couple days. You still have a little bit of implied volatility, not a lot. Google's not a big mover there. But maybe you come out to a 15 delta type bull put type scenario, maybe a 14 delta 1050 by 1040 bull put spread, get it under these moving averages, you get it underneath some minor levels of support there at 1060 and 1050 as well. You'd want to get something all the way under 1,000, but that's just not going to happen with the price being at 1133 unless you go out to more time frame. But that's what really kind of initially sparked my curiosity, was just that with the price action doing what it did, with the report being better than expected, with the market being more seemingly more bullish every single day, at least the mindset of the market more bullish every day, and specifically with this communication sector, which has been really, really, really good since that one day bear market ended on December 24th. This is a sector that's up near 18-19%, Tim. Google's in that sector as well. So market slightly bullish, communication slightly bullish. Google reports a better, in my estimation, a better report than what the market deemed. I think credit spreads are appropriate here, directional. I think anything above 1143 by 1150.
Yeah, the numbers were fine. Earnings were fine. It's just earnings growth. And that is the storyline that you and Mark and Matt or myself talked about on the podcast the other day, is that slowing global growth. If EPS numbers do come down, is it going to eventually affect the market?
Can you just talk about that for just a moment? Because I think it's a very, very important discussion. It goes into that overall theme that we've been seeing, or the narrative we've been seeing in 2019 of slowing global economic growth. And so now what we're seeing is depressing earnings, and some people might not exactly know what that means. So can you kind of take a moment to explain that?
Sure. Every company has revenue and earnings expectations. We measure it in a lot of different ways. One of them is through EPS. And when they come out and give us the number, it's like their report card. How much money did you make? Now, it's only one component of the report card, but Google has been growing their earnings over time. In 2013, they had 55 billion in sales, 2014, 66 billion, 2015, 75 billion. 16, 90 billion, 17, 110 billion, and 18, they finished up the quarter just now, and the overall net revenue was up. Their EPS trends, Matt, they went from 19 EPS in 13 to 20 to 23 to 28 to 32. So the company essentially is making more money over time. They're doing everything that you would want to see from a fundamental balance sheet perspective, but the expectation was higher. It's kind of like in the football game the other day. The Patriots won, but it wasn't a great game, right? Still got to give them the victory. They still made a lot. They get the championship, they get the title. Google actually had a great quarter. They made the money. The actual earnings and profit was there, but the line was higher on just one component, not all components.
Technically, the Pats beat the line.
Right.
But the analogy holds. Let's say, the Pats are playing the Dolphins, right? And the line is, Pats minus 16 because that's how bad the Dolphins are. And so the Patriots are expected to win, but if they only win by 3, they don't win the bettor's money, right? Mm. And so Google's expected to do really, really good. Facebook's expected to do really, really, really good. Microsoft, Apple, Google, all of these companies are priced to do really, really well. When you're looking at Google's PE ratio right now at 27 versus a 5-year average at 30, those expectations have came down just a tiny bit, but you're still priced to, I wouldn't say Google's priced for perfection like a Facebook or, an Amazon or something like that, but you're still priced to do really, really good. So when you come in at 21.5% year over year increase in revenue, that is a good number. When you come in at 12.77, that's a good number. 39.3, that's a good number, Tim. In my estimation, Google beat.
I agree. They came in at 31% EPS, Matt.
Yeah, they covered the line. So, yeah. I think it's a slight overreaction to a little bit of capital expenditure. And quite frankly, Tim, probably the most likely scenario was there's a couple hedge funds or institutions that were just reallocating money into a different area of the market, and they used earnings as an opportunity to get out of it.
It could also just be a tired market. The S&P is up, approaching new resistance zones, and maybe the market doesn't want to break and run. And Google's earnings and information weren't good enough to propel buyers to come in and buy them at higher prices. I'm with you. Probably
spoiled little brats. Seriously, all they ever want is free money. Google's report it wasn't Facebook's report, but in my estimation, Google's report was better than Amazon. And Tim, in my estimation, it was also better than Apple's report. Mm-hmm. And we saw what happened with Apple on the report. Not only did they start running and break out of that 160, they triggered above that 170 and currently sitting at 173. And it just continues to want to fade up into that 180 to 182. So I took Google's earnings report better than its counterparts. Maybe Facebook was better. I know Facebook's was better than Google, but I see it as a positive report, muted market response, and that's going to give us an opportunity above that 1143 by 1150 level if it does break.
There's a lot of stocks moving on the S&P here today. Even in a stock picker's market, good reminder, you're going to get some volatility and some action. One of them is AMD, Matt. They hit the news wire this morning, and it's non-earnings related on a little bit of a pullback. AMD moving 3 or 4% is not a big deal because that company can move 10% in a day. But I really love the opportunity for a pullback here after this post-earnings gap. Just some sector-specific news, nothing really of note, coming back into that old resistance point.
If AMD is not moving 4%, something's wrong with AMD.
Yeah.
This is just a stock that loves to drive. It loves to move. It's dirty, sexy money. We put it on dirty, sexy money for a reason. It's a stock that averages $1.42 on points on a daily basis. It's a stock that averages 4 to 5% moving on a daily basis. So this is par for the course when you trade AMD. And as a short-term delta trader, they love AMD. They love day trading AMD. They love swing trading AMD for those potential, big moves that AMD has in it. As a cash flow, I love doing cover calls on AMD, but it's not an easy cover call stock. There's no doubt about that.
Mm-hmm. No, it requires quite a bit of rolling and management. If you know how to do that, it's a great one. That's why it's dirty, sexy money, right?
Yeah, it's 5% ROI on a monthly basis if you know how to manage and roll and, those types of things. But you give me a retracement down to 22 on AMD, I'll sign up.
Correct. Yeah, correct. That's what I'm watching too. It's been on my watch list for a while. I haven't been in it. I missed the breakout because it was an earnings breakout, and now I'm waiting for this pullback.
Yeah, and it's one that everybody should have on their watch list, because this is now a stock that is breaking out of the sideways channel that it has had over the course of the last, 2.5 months. But it's also a stock that we had on the scanner report with the breakout of 22. It's obviously locking in some profit here, and I'm going to promise you one thing: AMD, whenever it does confirm that retracement, it's going to be on the options report.
Yeah. One company that is up, retailer Estee Lauder, EL, up almost 10%. They raised full year guidance and profit expectations. Company gapping out like crazy. That's a post gap move. Obviously, you would probably play it in volatility conditions. Nothing there technically for me. I mean, is that a runaway gap potentially, Matt?
The intraday stuff I'm seeing over the course of the last 30 to 45 minutes. And let's just take a look here. That intraday stuff, it's got to hold this, number one, and most importantly, it's got to hold that 150 level right here. Mm-hmm. You do have the gap range right there at about 148.33, but 150 is going to be a significant whole number for it. Traders will make decisions over that. It's also a pretty significant historical level. As you can see, that 150 to 153 level over here on the gap off. I don't even know what that gap was, but that was probably some news-related gap, kind of hitting into that 150 level. So I would say it's got to stay above 150 for this. I don't trade Estee Lauder. It's not something that gets me up in the morning, but if you do, that 150 and holding 148 by 30 cents is probably pretty important. But no, I would not play this directionally on anything post-gap.
Yeah, Canopy Growth, a lot of the different Tilray, ACB, Cron, they continue to be in the news every day. When the volatility is as high as it is in the marijuana sector, you're going to see movement. They're all getting high movement and action, but not necessarily to the upside. A little bit of a pullback developing here on several.
I want to talk about Cron real quick, T, and I want to bring Cody in here because Cody, you're an investor in Cron. You like the company. You like doing covered calls on the company. And it has earnings coming up, Cody, in about a week from now, right? Mm-hmm. So let's get the exact date here. It's got earnings on, I believe, the 13th before the market. So the 12th, you'd have to do something before. Cody asked me a question. Cody, if you don't mind, ask Tim the question as well. Let's have a conversation on it.
Tim, yesterday I was looking at Cron. I was looking at the portfolio and I have some cover calls on it. And I texted Matt and I said, Matt, what do you think I should do when it comes to collaring? Should I collar now or should I wait because earnings are coming up? And his answer was, well, actually, give me your answer.
I said, I want to get, let's get Tim's take on it before I give you what my answer was. And Tim, basically the question was exactly what Cody said. He said, I own Cron. I know I need to collar the trade, but do I do it now or do I wait for right before earnings?
It's a good question.
Especially on something like this, which is just, it's been doing great.
First thing that you would.
Oh yeah, another thought that I had in that question was, we hit $25 yesterday. My thought was, all right, if I cover now and it were to pull back, say to $20 or even break below 18, I'm like, well, if I collar it now, I can lock in that 25.
And by the way, I don't think there's a wrong answer here. Like if you collared today, or if you collared the day before earnings, I don't think there's a wrong answer there. But I also believe that you should always have a plan, right? Mm-hmm. So Tim, what would your response be?
Well, I would have done several things. Cody's a veteran trader. He went through mentorship with you. So I'm already going to have some assumptions about his skill set and understanding of concepts like extrinsic value. The first thing I'd ask is, where's your expiration on your short call? And is there an opportunity to roll or manage the short call before you worry about a collar trade?
Oh, he's been rolling up that short call. We've been talking about that the whole time. Well, maybe not so much talking, more like complaining about it.
Well, yeah. And I get it. It's a mindset problem though, because whining about losing on a short call when you're making a lot of money on the equity, you're missing the point of the cover call.
So I'm getting a little greedy. All right, like we've never done it. Okay.
Tim, you pointed out a first world problem. Thank you very much for making us feel all guilty and greedy here. But Yeah, it is. But I'll tell you, anybody that does cover calls, they know what we're complaining about. When you have a skyrocketing stock, you're making money on the growth, and you constantly have to roll that call up and up and up and then out and up and up and then out. And finally, you say to yourself, my God, man, just go down a little bit. Let my call expire worthless so I can do this again. But what's your answer, bro?
I would leave the call short in the money if you weren't going to call her. But if you roll the call up and out to pick up more extrinsic value, I would then instantly call her it now, because you're outside of Bollinger Band range there and it's going to pull back into earnings at some point. You could justify leaving that trade on until the day before, but it should be system based. This should not be something you fly by the seat of your pants on. The way you do cron here should be the way you would do AMD in 3 months if it does do the same thing, right? If you're going to trade these dirty, sexy money cover calls, rolling in the money upward movement is going to be a big, big part of your overall system and how you collar it, because you're going to get crazy movement. It's managing the volatility that really comes down to. So I'd want to know what you're going to do with the short call, and if that's based on your rule and your system, and then how you establish that. That would answer the way I would approach a caller.
Okay. Number one, he's good on his short call. He's been rolling it pretty good. I said, quote, leave it alone until right before earnings, unless it goes back down under 20, and then you call it under 20.
Mm-hmm. Yeah. And there's nothing wrong with any of these scenarios. You know, one of the things I always want to see a new trader go through, and Cody, you're still relatively new in the great scheme of things. You know, you're in this 3 years or so, I guess, right?
Yeah, about 3.5, going on 4 right now.
It's rule development to take the emotions out, because it can be tricky, and you want to pound the table every now and then when the market is moving so fast, so furious that you have to manage. I mean, it's costing you in commissions, and you feel like you're giving up profitability, and then you got to add another hedge. Remember, first world problem, the equity is making you money, and I will remind you of that every time. But the second thing is, you should have a rule for this, right? And your rule might be different than, say, Adam Stewart's rule, you know, who's a halftime crew member and team tackle, whatever, member as well. You know, we need to know exactly how we're going to approach a market in these conditions, Matt, not really fly by the seat of our pants. Rule-based trading for sure.
Well, no, I get the rule-based trading, but when you have a stock that's went from $10 to $25 in a month and a half, sometimes you got to throw those rules out the window, and you got to start making some decisions, right? Because they blow past your rules constantly. And so I do like when you're trying to make decisions like Cody was trying to make last night in collaring the trade. I like if then act type rules. If it breaks 20, then you act. If it doesn't break 20, then you act before the announcement. I like those types of rules because it does take the decision making out of the equation. It takes the emotion out of the equation. Now Cron can do whatever it wants. And by the way, Cron coming down a little bit today, I don't think Cody's that upset, because now the short call is making him some money. It's coming back down into out of the money position, so he can collar that trade, especially if Cron does come underneath 20. And so I just like those types of rules. If A happens, then you do B, but if it doesn't, then you do C. I like that, because then Cody knows exactly what he needs to do in each specific circumstance, right? And if it continues to, you know, go parabolic, he continues to roll the call option until earnings, and then he collars in and makes some decisions post earnings.
Yeah, and one of the real tricky things with these high flying upward movement is that the back testing is inconsistent on what you should do in the money. You know, and so you're right on this regard, especially dirty, sexy money stocks, Matt. When they go flying like this, sometimes it's best just to pull that call off and let them run. But there's
nothing wrong with that.
You know,
I do that a lot. There's nothing wrong with that. And I've said there's two things you got to manage with cover calls. And I know this is Delta Tuesday, so let's have a real good conversation on cover calls. But there's two things you got to manage. The number one thing is you got to manage net liquidation value. That's the first thing you got to manage. The second thing you got to manage is the strike price you've sold. And once that stock starts getting above that strike price you sold, you got decisions to make. Okay. Number one, you can buy back the call option and let it just run. Something like Cron, when it broke out of $13.5, I could have easily seen somebody say, I'm going to let that run a little bit. And that's okay. If you have a strong breakout and you believe in the breakout, I would unwind that call option and let it run until I got to the point where it started slowing down. So you got to make those decisions. But even if, like what Cody did, Cody just kept rolling the call option. There's nothing wrong with that. There's nothing wrong. You just got to make decisions.
Yeah, and I love the stock. By the way, I'm so excited about that Dirty Sexy Money list. I mean, we should talk about it more, quite frankly. Some of those candidates are unbelievably good. And I know that they're higher ROI, but for veteran traders, Matt, those are the opportunities we love, right? We love stuff like that to backfill our more conservative growth and cash flow strategies. So on a Delta Tuesday, where we can nail some of these down, marijuana stocks have been all over the place. Cron is one of the better ones. It's one of the more liquid ones that's tradable. And I think it's priced to perfection for a lot of cover call traders, $21 a share. So, yeah. S&P, Matt, it's a mixed market. 237 up, 253 down. We're back and forth. Estee Lauder was the leader. Leggett & Platt, Ralph Lauren. You got some of the retail stocks moving. Pacific Oil and Gas is up, but not real interested in that. Archer Daniels down, AMD down, Clorox down, CenturyLink down, but we are on a flat market. When the market is at 0.12% to the green, only up 3 points for the day, you know you've got some back and forth going.
Well, you're also fighting the 200-day moving average right here. Yeah. You're doing a little bit. That's where it kind of ticked at the top here today. So you got that next little 200-day moving right about 27.40. I believe it ticks at 27. What is it currently? 27.24. And so you got the 200-day moves right there at about 27.40, 45. You break that on intraday, it should be smooth sailing to 2,800.
200 MA is probably one of the last testing points for a lot of people until 2,800 here.
And it's not that strong of a resistance level. There's just no news today.
Yeah. Well, and there may be news tonight. Trump has his, speech tonight that he's going to be given, and that could impact the markets. Is there anything from that testimony or whatever's going to happen there in his speech that you're going to be?
That might have been a Freudian slip on your
I heard it too.
Testimony, bro.
The State of the Union.
I mean, we all know you slightly lean left of the political scale here, but that was definitely Freudian, bro.
Yeah.
No,
he might have gotten away with it if you hadn't pointed it out.
He was going to, but that's not me not to point those things out. I have to point those things out. Yeah. But I'm gonna bring Cody in real quick. Cody, what's your expectations with the President's State of the Union address tonight?
Well, first and foremost, it's going to be very Trumpian. I think I do think his writers are in the background, given doing their thing, writing the more concise and word-oriented speeches, but he always seems to go off script. So we'll probably start off very precise. I expect to hear border wall. I expect to hear China. And then I expect to hear either infrastructure or pharmaceutical. One of the two.
Trump is better when he's off script. He's better when he doesn't have a teleprompter. But there's also risk to variables there. Okay, and I understand it because it's just he's an emotional speaker, and so I'm hoping there's a message of come together. Mm-hmm. I hope there's an olive branch there. It's just so divisive these days, and maybe the Democrats don't accept that olive branch, but I hope it's offered, and and not in the sense that, if you don't pay for my border wall, I'm going to shut the government down again. That's not an olive branch, but that's what I hope to see tonight. And I'm going to watch the State of the Union because I watch the State of the Union every year, as I think every American should. But it's going to be grab the popcorn and enjoy a glass of wine with it. That's my night tonight.
First of all, line of the day is in the chat right now from Mr. Fidget. A Freudian slip is when you say one thing, but you mean your mother.
Thank you, Mr. Fidget.
I'll get that on Twitter.
We appreciate that clarity more than you know.
That is so funny. Move on to the Dow while we talk about this Trump discussion here as well. A lot of the large cap companies are going to lead, and they're so sensitive right now with the S&P, same thing, but we are above the 200 MA. Mm-hmm. And tonight you also do have Disney earnings, Matt. If you had to pick one of the other indexes, either the S&P or the Dow as bullish, this looks more bullish to me. You are above the 200 MA in that regard. You do have resistance up at 26,000, but a lot of these companies have been leading.
It's slight, Tim. It's slight, but they're looking very similar, to be honest with you. If you do take that 200-day moving average out, you really, with the naked eye, could not tell the difference in the current trend and pattern on the Dow versus the S&P. But I'll give you that the breakout of 25,000, getting above that 200-day moving average is probably slightly more bullish than where the S&P is right now, slightly under the 200-day.
Well, and one of the stocks that's been leading here throughout the year actually is Boeing. Boeing's up another 2.3% today, showing me a lot of strength. I put a question on Twitter, what part of the market are you most bullish about? And one of our, Team Tackle members said industrials. And I could not argue with that. A lot of the industrial stocks have been going up, 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 up. Boeing is the biggest one of note, Matt, here, breaking 400 on a tear after that earnings.
Well, I hope everybody caught that one on Boeing, because we talked a lot about Boeing over the last week. It was all over our scouting reports. It's the breakout of 394 yesterday. The conclusion and the carry through of 400 today. If you put it on the scoreboard, and I'm ranking Boeing right now, Boeing's at the 5-yard line, guys.
Mm-hmm. We should all speak French today because GE got a fine from France for $57 million. Thank you, France, by the way. I appreciate that.
I was going to say, that must have made you happy.
Yeah.
Tim and his C'est la vie.
And yet GE is still up 1.3% today.
Hey, listen, I'm open-minded, but not with this company.
No. And listen, we like to make fun, but just to give you a
perspective.
A perspective here. This is what GE has done in the last 3 years versus the market, which done that. So, the making fun, you give GE a little credit for the snapback rally GE has had in the last, month and a half. But it's not a company I'm touching.
Disney, real quick, if you would, Matt, they've got earnings tonight, and the expectation, it looks like they're looking at $1.54 EPS number on $15 billion in revenue. Disney is a good company. We have them on our list for a reason. We have them on our Tackle 25 list. They're a fantastic company. Would you call her Disney going into earnings? Let's start with that question.
That's a great question. Would I call her Disney coming into earnings? No, I would not feel the need to call her Disney coming into earnings. Yeah. Disney is a very, very stable company. It's not a company that moves tremendously one way or the other on earnings. It's not. Now, would you call her just because you want to take the risk out and you're very conservative? You have that option. I'm just saying, if I'm looking at, an investment in AMD, for example, versus Disney, I don't even need to look at the chart, and I'm going to call her AMD. Disney, I wouldn't worry about it that much. It just doesn't move on earnings. It's a massive, stable, liquid company that is one of the staples of the market.
I want to throw it out there. My first stock I bought 3.5 years ago was Disney at $105. That tells you how much it's changed.
It doesn't move a lot.
It is not a high volatility company.
No,
more of a neutral cash flow.
It pays you a little dividend. It's good on the covered call. It's not going to be crazy. And you know what, Tim? We love those covered calls on AMD when they go great, but they're tough to manage over time. A covered call such as Disney, it's not that difficult to manage a covered call on Disney. Now, you're not going to get your 4% ROI on a covered call like you would on AMD, but you're going to cash flow 1.8 to 2.2%, average out 2% monthly, and you don't have to worry about the massive movement one way or the other.
Let's move on to the NASDAQ, if you would. Keep breaking down the market step by step like we do each and every day here in the Halftime Report. And by the way, if you're out there in your halftime crew or Team Tackle, always give us a quick like and a share. We do appreciate you getting the word out for us as well. There's nothing like word of mouth, Matt. I think it's one of the most valuable things on the planet. If you like something, give a recommendation. NQ is moving up here, 69.90, approaching the 200 AMA. Obviously, we've talked about tech earnings, tech strength, 65 companies moving up here, 36 down. What's your read on NQ aside from the other markets?
Very similar to the S&P right now. You got 7,000 overhead. That's going to be important to the NASDAQ. You got the 200-day moving average right here at about 70, 60. So you do have those overhead resistance, and you're piercing against those right now. So would you be looking to enter into any NASDAQ, S&P 500 trades right now? Maybe you wait till it gets above those levels. but you're still slightly bullish, and I'm not seeing it slow down. I mean, I'm not seeing profit taking today. I mean, the NASDAQ's up, 50 points on the day. Yeah, is it the standard ATR of 100? No, you have some overhead resistance, but I am not taking anything today as, oh my God, that we need to start locking in profit here on our swing trades. I mean, it's just slowing down. You got the rest of the week, Tim, and here's a good week in the market because yeah, we do have the State of the Union tonight, and we have Powell tomorrow night. Oh, and by the way, did you know they went on a dinner date last night?
Jay Powell and Don Trump went to dinner.
They went to dinner, a nice little dinner date. I believe
got to be a
candles and
joke in
roses and all that jazz. And I believe Powell did kiss the ring as he approached the dinner table.
Who buys?
Who buys that?
Who picks up the check?
The government does. We do. That's who we do. we picked up that check for them to manipulate the stock market last night. That's what we did. So yeah, Trump nor Powell's paying for that. We, as the people of the American, oh wow, I about went American colonies on this one.
Yeah.
We do. We pick up the check.
Well, we are a representative republic. If people do know their constitution for sure, I got no problem if you want to talk colonies for at some point, Maddie. Not right now as we're breaking down tech stocks, though. Obviously, there's a bunch of activity on individual names here today. One of them, Matt, is Tesla's up 2.18%, $320 a share. The volatility of the stock has been wild, and it has gone from 250 to 380 for 2 years almost, it seems. We're at $320. Do we expect anything different than what we've seen over the last couple of years, just back and forth?
No, I'm not touching this company until it breaks out of those ranges.
Another stock that's up here today is EA. A lot of the gaming
and I'm
stocks.
also not removing my massive support resistance zone until it breaks out of those resistance.
Leave it, baby. I like it.
Staying.
Electronic arts gaming sector, Matt, is also showing me some volatility here today. EA is up 2.5%.
Reports earnings today.
Yeah, and they had some reversal characteristics developing here. I've liked some of these gaming stocks. So,
it's fascinating. EA's up 2.5%, and yet every day in the last 3 weeks, it's either up or down 3%. So, I was going to make a joke of people buying in front of an earnings because that has not played out well for people recently. But there's nothing to see there. It's a post-earnings play.
Okay, give me the RTY as we keep moving through the markets and the indexes, the Russell 2000 and fading higher. It has had relative strength against some of the other indexes for a bit. Our next resistance point, you've got some pivot points back here, Matt. We're in upward drift mode right now. It's going to go the way of the rest of the market.
Yeah, it's going to track the market.
Yeah, $DXY, moving on to currencies, then commodities. Dollar bill, y'all. We would have expected a little bit of a fade, Matt. It's only up 0.16%. Not exactly bullish here, but it is developing more of a neutral consolidation with some of these pivot relationships.
15 cents movement on the dollar is the equivalent of a 1% movement on the S&P.
Mm-hmm.
Dollars don't move that much. You got to look at the candle. And, I talked about it yesterday with the snapback rally it had yesterday. It's almost like the Fed didn't even meet last week on the dollar. This thing, and I said it yesterday, I'm going to confirm it today. We're dead on neutral on the dollar right now.
Yeah.
There's no more slight bullish. There's no more slight bearish. We are dead on neutral until we see overhead resistance right there at about 96.60. If that is broken, we move back into a slightly bullish behavior, and we don't, and we're not bearish until we see 95 handle broken.
The Institute for Supply Management had a report come out today on their services data. It didn't really even move the needle on the dollar. You've got the Jerome Powell testimony tomorrow, and obviously the State of the Union tonight. Those are going to be much, much more important in terms of impacting this dollar. Give me crude oil, if you would. Crude light, trying to fade, Matt, upward, but now we're having a little bit of a pullback. We almost tested and broke 55. It was a break technically there on Friday. Now 2 red candles above moving averages. Not really a different read for me.
I still got a slightly bullish call on it.
Yeah.
What you would want to see, and we talked about it yesterday, and we talked about it last Friday as well. What you would want to see as it broke out of this 55 handle, Tim, it just kind of consolidated. It held that 55 until it kind of opened up here on the cash open on Monday, and then we saw the fade and the recover. And so now you're just back into some degree of short term. And when I mean that intraday neutrality between 53, really kind of down here at this support level around 53.45, and the overhead resistance at 55.75. The trade that was really kind of triggering was when it closed on Friday above that 55, to get it as it goes above the intraday resistance level of that 55.75. It never really did confirm on Monday. As you can see, it just kind of came down and faded. But I'm still looking at it as slightly bullish, and I still believe that, whereas, you and I kind of stopped doing some of the systems we do on oil, such as naked puts and bull put spreads on crude oil, naked puts on USO, covered calls on USO. I think those are perfectly fine to start doing again, and I talked about that over the last week as well. But any directional trade, if you're not already in one, yeah, I mean, you got to wait till it breaks that that resistance level now at 55.75. But I still like that trigger.
Yeah. I can see it as well. I mean, you do have upward movement here and potential. If you break another 55, we've got another EIA number tomorrow. I know they're comically bad, but they are catalyst, and they can move the market, especially if it moves the currency market, with that relationship against the dollar. Dollar fading up, oil can't break out. Makes sense to me. We'll see if it can come through. Give me gold, if you would, real quick. Metals market. I like pullback developing. Got to pull back a little bit more, but I do like this here, Matt. If you missed the entry on the breakout,
it's not a pullback yet. That's forming a high base.
Yeah.
So a pullback would be coming down into support the breakout channel at 1300. If it fades here, and we've talked about this with gold a lot, Tim, gold has a tendency to run and consolidate, run and consolidate. I would love a pullback to 1300 here. I would absolutely love it, because this trade's over for me. So I would love a pullback coming into 1300, but I do believe the most likely response is a consolidation, wait for these averages to catch up, and then you break out of 1330 or 1331. I lied. Let's go 1330. So you break out of 1330. That's the next trigger.
Yeah, for sure. I mean, this little 3-candle consolidation is now just setting itself up for further triggers. I'm still bullish on gold. I think we had it probably about the 25-yard line, I'm guessing, on the most recent commodity report.
I'll tell you. Yeah, I'll tell you one thing about gold, Tim. Gold is basically break even today, right? Dollar is bullish today. Gold is break even today. That shows you a little bit of mindset about gold. Crude's coming down quite a bit against the dollar today. Gold is holding up against the dollar today. So that should show you a little bit more positive behavior towards gold right now.
One of your favorite commodities recently has been palladium. It is showing another day to the upside as well, about 1%. Just bullish. It was a beautiful pattern, Matt. When you see patterns like that, it doesn't matter what market it is. You're going to get excited as a technician.
Still a beautiful pattern.
Yeah, for sure.
It still is. And the best trigger here hasn't even happened yet. The retracements happened. That's been triggering. That's still triggering today. But the best trigger is the breakout. I love it when Tim Freeze is honest, Cody.
I mean, he looks so concerned in his video.
And then whenever he comes back, he catches up so fast. Like he does this quick little move that Tim does not have the capability of making. It's fascinating. How you doing, Tim?
I have world-class quickness. What are you talking about?
Your internet doesn't.
No. My internet is more bidirectional volatility. It's more like a Vega trade than it has been anything else. It's not a Delta trade.
Comcast is definitely a bidirectional trade.
Jeez, criminy. There are quite a few companies, Matt, that I think are actually really good setups technically here today. Some bullish, some bearish. I was going through some of them with you in the pre-production. Intel potentially breaking 50, Planet Fitness, Etsy. There's a lot of real strong companies. We are now moving into definitely a stock pickers market. Think about Intel, and this is why we talk about it over and over and over again. It's got to close and confirm. This morning was breaking out, Matt.
Yeah, it was, and we're getting excited, and I'm still getting excited for Intel. This trigger above 50 is a trigger we've been waiting on, but it's got to close, Tim. And especially in this market condition where you're pressing up against those 200-day moving averages, even though we're not that concerned, how many times have we seen in the last 2 months a potential breakout fail to confirm on the day? We got to see it. And I've said this a lot recently. You got to see it close above that level. You got to see it close above that level at 50. And then you put your order in above the high of the confirmation candle. So until Intel does that, until it shows me it can, maintain life above $50, I'm not going to touch it. I'm just going to be patient.
Yeah, patience, but it's been on our wall. We've been patient with this one for 6 months.
Well, and Tim, let me speak to this real quick, because I love breakouts. Breakouts are my favorite pattern. Retracements, when I was a younger trader, I think retracements are easier to trade for new traders, but breakouts are more powerful trades. And when you have a very trending market like you had in 13 and 14 or 16 and 17, not 16 but 17, when you have a very trending market, I'll put an order to get into a trade above the resistance channel without confirmation, Tim. I'll put an order 1/2 ATR above the resistance channel. If it triggers, I call that confirmation. I want to get in aggressively on those types of markets. When you're dealing with a market like 2018, like 2019 so far, like 2015, for example, or for the first 10 months of 2016 before the Trump election in November, you got to be a little more cautious in those markets because they're not giving you the clean breakout. You got to wait to see it close. And then once it closes above those levels, that's an indication to the entire market that it wants to run.
Yeah, and I would play a breakout on Intel if it does, and if in fact does close above 50. There's no doubt. That's been my trigger for a while. I know the tail popped up there and tested it. You also have that little weird doji, Matt, and I got to get your take on this because, triggering is such an important part of mechanics. That little weird doji above the 200 back in November, does that play into where you would trigger this thing at all? Or do you kind of just throw that out the window and say that's an island doji, whatever you want to call it?
I'll tell you what I said in the scouting report meeting on Friday, Tim. This was one of the one-liners that came out of the scouting report meeting. Somebody asked me that exact same question. I can't remember the stock. I don't remember the stock, what it was. But I said, I'm not worried about that tick. And no, I'm not worried about Intel's tick on a fake gap up, completely get destroyed the next day that happened in December that was volatile. I think you close above 50 either today or tomorrow. Or maybe next week, you close above 50, use the high of the day at that point.
A couple other stocks that grabbed my eye here today, as I work my watch list and my process, I saw Planet Fitness from the reports over the weekend. PLNT also pressing in a high base pattern, potentially on a breakout as well. Nice little move in the morning. Now it's given back a lot of that movement. That candlestick does not have a strong tail, not exactly going to give you a lot of confidence on the breakout yet, Matt.
If you're looking to trade Planet Fitness and it's potentially breaking out of a high base, depending on where you put the trigger, Tim. If you got to close above, say, $59, you're testing that level. If you need a trigger above 60, I understand that, but you better, if you're looking to trade Planet, you only got a couple days before you can't trade that anymore because of earnings coming up. So yeah. I got to, like I said, on the same conversation, Tim. Close it right now. What is it? 58.97. I would not call that confirmation.
Another stock that grabbed my eye was Etsy, which I don't trade all that often. Obviously, a very popular company of note. I actually looked at the fundamentals when I went through and did my technicals this morning. Their earnings growth has been impressive. Could be a potential candidate for dirty, sexy money. ETSY. And what made me go dig into this one, there was no news that really hit the headlines right away. So it's not like the company had an announcement. It wasn't earnings, and it's breaking a high base pattern there, Matt. We were consolidating there for about 2 weeks. We hit 2 pivot points up in this region. Now it's up, 6% here today. Beautiful looking candlestick.
Yeah, it is a beautiful looking candlestick, but again, you got to see it close above these levels right here, Tim. You're testing that right now at about 58.25. So I would say a close above 58.25 would be confirmation, and then use the high of the day, 60.58, as a potential trigger above.
Yeah. Starbucks caught Cody's eye and Alibaba off the tackle 25. Baba's had a tremendous run in January. And obviously, as the market has turned back and come back around, it's done that. Starbucks also fading higher, breaking above a resistance. Tackle 25 candidate. They've got their dividend date tomorrow, looks like. Yeah.
Yeah, not a great swing trading company, though.
Not a good swing trade, more of a cover call stock.
More long-term cover call.
And the last one here, Matt, Alibaba, and then we'll just kind of talk earnings set up tomorrow as well. Just a beautiful run here and earnings last week.
Post-earnings.
Strength, post-earnings. But the market's fading. Even a beautiful day like that, it's up 2%. It's one of the better stocks that are of that size and note. But we're not getting a lot of carry through on this market. It just feels like we're fading here, Matt. Maybe this Fed testimony, maybe a lack of catalyst, maybe the market is just afraid of resistance. It doesn't really matter. Light volatility day on an upward drift day.
No, but I do think it's significant. I mean, you're getting above the 200-day moving average on Alibaba. You're above the previous level highs that happened last Friday and Thursday. You are post-earnings after a good earnings report that Alibaba had a week ago. You trigger above today's high. That's definitely a swing trade for me.
Yeah, I will tell you, I have a bias that is bullish in the market right now just because of the current trend and whatnot. But when we are up at these resistance points and dealing with some of this fading volatility, I'm going to go prep, some of those bear trades because if it does turn and confirm and trigger tomorrow, things like FedEx, I love that candidate from the report last weekend, and if it does turn over, it's just been setting up for about 6 weeks to do this. So, if you get confirmation, you got to be ready on both sides.
You do. You have to be ready on both sides, but I am slightly bullish in the market, and I'm going to continue to be that way until the market shows me otherwise.
Yeah. All right, guys. Halftime crew and halftime report. That is our show here today. Matt, any last thoughts taking these guys out of here, getting them ready?
No, the one dude who does not like us, he likes to log in about for 5 seconds to give us a down arrow. I want to find out who this guy is. They obviously don't like free good content.
It's probably someone who just likes another trading channel and they pop in.
I know exactly what's going on. It happens in the online universe.
Capitalism.
It's just it's how it works. It's par for the course. You got it. You're gonna have your lovers. You're gonna have your haters in an online world. Simple. It's the simple reality. But no, we got Delta Tuesday. We got tomorrow. Tim, I will not be here. You and Cody are going to be hanging out with the crew the rest of the week. I am heading to Chicago. So is anybody in Chicago right now? How cold is it? Do I need to bring my winter gear?
I'm guessing you do.
I got to bring my winter gear?
Let's see what it is. Last I checked, it was definitely negative wind chill. Is it still that cold over there?
Awesome. Yes, I am absolutely bringing my winter gear. Are you kidding me? I got a hoodie. I got a coat. I've walked off that plane in January before. It is freezing cold.
It's not nearly as bad. It's only 33 right now.
Oh no!
with an icy storm warning.
They are supposed to get some ice, type. Yeah, this is fantastic. I can't wait to fly tomorrow, Tim. My fear of flying is on full tilt right now.
Probably the one call to action, and it's good on a plane as well, Matt. I know you've already listened to it because you recorded it, is get a podcast. If you ever do jump on an airplane and you want a couple of hours to kind of burn, just definitely download the podcast. We just cut episode 307. Really, really enjoyed it, Matt. I put the link in the chat for everybody. Let me ask you guys on Halftime Crew, where do you listen to our podcast at? Do you listen to it on the website, on Spotify, on iTunes? Where do you actually get the podcast? Because we try to track all the data everywhere. It's such a world we live in, Matt. You got to get your information out there on all channels,
Yeah, I mean, because everybody has their go-tos. Like for me, I have a podcast app called Podcruncher that I really, really like. But most people, I think, just use the standard iTunes one, that is just, stock on any iPhone out there. There's a lot of different ways.
I ran into Steve Hipple the other day, who he's a coach and a mentor for legacy education. And it was so cool, man. I haven't seen Steve in probably 8 months, and he's like, oh yeah, I heard you and Matt talking on the podcast about this and that and whatnot. It's a really humbling thing to realize that it's a way for us to connect with all of our community, and I appreciate everybody who listens to it. I love it. I really am enjoying this one.
Yeah, guys, and we would really appreciate it if you could go over there to iTunes and give us a nice little 5-star review on there. It helps us promote it and get the message out there to more eyes and more ears. So
We're gonna get our one troll that gives us dislikes to go over there and give us a
Oh,
one.
The thumbs down came down. I think somebody clicked it accidentally.
I'm clicking it now. I'm reapplying it. There you go. I'm reapplying it. We had to have one. Okay. You're not ruining my soapbox on that. But no, we would really, really appreciate it if you guys could give us a nice little review on iTunes. That always helps us out.
Very good. Cody, you and I tomorrow. Let's get ready for that, young man. We'll see everybody back here. If you're not subscribed yet, subscribe and click the bell and like our page here on Tackle Trading on YouTube. Matt, good job today. We're out.
Yeah, good job at you.